Well, strengthening the beef industry, it has been a big focus in recent weeks with the U.S. herd currently at historically small levels. The One Big Beautiful Bill's restoration of 100% bonus depreciation now providing financial incentives for ranchers to grow the heifer herd. Roger McEowen with the Washburn School of Law joins us now. Roger, thanks. So we're looking at an outlook. Give us the highlights of this when it comes to bonus depreciation's impact on herd growth. What type of immediate cost recovery is there?
Yeah, well, good to be with you, Suzanne. That's a great question. The One Big Beautiful Bill Act restored bonus depreciation to 100% for assets acquired and placed in service on or after January 20th of this year. And for a breeding animal, such as a heifer, that animal is deemed to be placed in service according to the IRS. I guess you'd have to ask the bull when the heifer is placed in service, but the IRS says it's when the heifer becomes mature. So if that heifer becomes mature during the tax year now, post January 20 this year, you can get 100% bonus depreciation on that. Otherwise, it was that was phasing down. We were at 40% and then going to 20%, 40% this year, and then 20%, and then zero. So what this does is allow you to front load the depreciation immediately. So you get a large deduction of 100% of the tax basis in that heifer on your purchased heifers. That's going to reduce the taxable income for the rancher in the year of purchase, which again reduces the tax liability. And so that helps the rancher's cash flow. And in the context of herd growth, that extra cash can immediately be reinvested into buying more replacement heifers or developing infrastructure or covering operating costs associated with retaining and managing the herd. So whether ranchers do that or not, I don't know. All I'm saying is, say we've got a tax incentive here that could help rebuild that heifer herd and rebuild the cattle supply.
So basically, they can buy heifers, they can bring them down, they can, of course, then write that off 100%, get that cash, buy more replacements. Great opportunity for ranchers, but how can they best capitalize on the tax provision? What do they need to do?
Well, you've got to look at a whole lot of other provisions. You don't want to get overexcited about bonus depreciation or fast methods of depreciation for that matter. You want to fit it into your overall tax strategy. So what I'm saying is if it fits in your overall tax strategy, sit down with your accountant, your CPA, your tax attorney, figure out if that might be a good strategy for you. But what I'm saying is this is a lot better position than we would have been in had bonus depreciation been allowed to continue to decline and then phase out. There would have been no tax incentive necessarily other than just maker's depreciation, regular depreciation on heifers. This allows you to front load that depreciation and increase your cash flow.
Well, speaking of some big opportunities for farmers, of course, I'm sure you've been following it, as we all have, the trade talks with China, big focus for the week. President Trump saying the new deal includes China buying a tremendous amount of U.S. ag products like soybeans. We don't have the full details, of course, are going to continue to unfold, but big business for farmers, potentially. What are you seeing?
Yeah, and if you're a soybean farmer and you were sitting on some beans to sell, you probably should have sold those by now because it's, I think we reached earlier in the week a 15-month high on the price of soybeans. But what this looks like is what we've got is China buying 25 million metric tons annually for the next 3 years. You get 12 million metric tons initially, and then renegotiate every year for 25 million after that, and then throw in 19 million tons of soybeans that'll be purchased by other countries in Southeast Asia. So, you're looking at somewhere between 30 and 40 million, maybe closer to 50 million in the out years. Of course, if China and these other countries play along with their commitments here and follow through. But that's what the administration has negotiated. So that's good for soybean farmers. That's going to be good for the soybean market in general. So we'll see what happens going forward. But we've got an immediate commitment to buy 12 million. Now, the downside of that is skeptic could say, yeah, China was going to buy that all along. They just waited until the market went down and they bought the 12 million on the cheap. But we did get some other concessions for that with respect to minerals and the like. So all in all, probably a pretty good deal.
Great stuff. Thank you, Roger, as always, for joining us. Of course, we're going to watch this all unfold and make sure that China holds true to their word. Roger McEowen with the Washburn School of Law. Always a pleasure.